Is RBI about to let the rupee slide to historic lows? Some say it's a bold move to compete with China. Others call it a dangerous gamble. But what does it mean for you? Could it lead to higher prices on imports, better opportunities for Indian exporters, or even reshape our economy? Let's dive in. Hey, I'm Ashish, and today we are unpacking why the rupee recently closed at 84.38 to the dollar, its biggest weekly loss since May. Meanwhile, the yuan is expected to keep sliding, especially if Trump enforces a 60% tariff threat on Chinese goods. India's trade deficit with China is already sitting at a staggering 83 billion, and a weaker rupee might widen that gap. But here's a twist. The RBI is fully aware and has over $680 billion in foreign reserve to carefully manage this depreciation. So what's really going on, and how does it affect your wallet? Why would RBI risk letting the rupee fall further? It's all about staying competitive in the global market. A weaker rupee makes Indian exports cheaper, giving us an edge in sectors like IT and pharmaceuticals. India's already chipping away at China's dominance in electronics manufacturing, and this currency strategy could help Make in India attract even more global supply chains. This is a great news for exporters, but could it mean higher prices on imported goods like smartphones or EVs for you? A weaker rupee indeed has its risks. For one, it can make exports more expensive, driving up inflation, especially for commodities like oil. Higher fuel costs could impact everything from transportation to daily groceries. Moreover, the trade deficit with China could widen further if the yuan's depreciation outpaces the rupee. Economists at HDFC Bank and IDFC First Bank predict the rupee could breach 85 to the dollar within the next 12 months. But remember, the RBI is known for keeping the rupee as one of the least volatile currencies globally. In fact, let's rewind to Trump's first presidency. The yuan dropped 11.5% during the 2018-19 tariff wars, and rupee followed closely, falling 11.2%. This wasn't a coincidence. The RBI strategically mirrors the yuan's moves to stay competitive, a strategy they are likely to repeat now. Madhuri Arora, a lead economist at MK Global Finance Services, highlights that RBI won't let the rupee float too freely, given India's heavy trade exposure to China. So what's the bottom line for investors and business? For exporters, a weaker rupee could be a blessing, making their goods more competitive globally. Sectors like IT and pharmaceutical and electronics could see a boost. Take Infosys and Pharma for an example. Infosys, a leader in IT services, earns 60% of its revenue from exports to US and Europe, providing critical services in cloud and digital transformation. Similarly, Pharma, India's largest pharmaceutical exporter, benefits significantly from a weaker rupee as it exports generic drugs to over 100 countries, including the US and European markets. However, the picture isn't as rosy for companies heavily reliant on imports. Take Tata Motors and Hindustan Zinc, for instance. Tata Motors imports a substantial portion of its components, including critical parts like batteries for electric vehicles, from China. Hindustan Zinc, on the other hand, relies on importing machinery and equipment for its mining operations. For these companies, a weaker rupee increases input costs, squeezes margins, and potentially leads to higher product prices. As an investor, it's crucial to weigh these features when evaluating your portfolio. If you're serious about staying ahead in the ever-changing market, hit that subscribe button. I'm here daily, breaking down the most critical financial stories that impact your investments. And hey, if you found the video useful, smash that like button and share it with your network. Let's decode the market together. In finance, timing and knowledge is everything. Stay informed, stay sharp, and let's make the most of the opportunity together. Thank you.